Hello, hi, and welcome to the Tax Files. My name is Ali Kazmi, and I'm delighted to be joined today by my co host, Ektaa. Good morning, Ektaa.
Good morning, Ali. Welcome again to the Tax Files, a monthly audio podcast where, alongside an esteemed guest, we will be discussing the most pertinent topics for tax and accounting professionals, while also getting to know key members of the tax industry a little bit better. Ali, how have you been?
I'm really good. A lot slimmer since you last saw me. Uh, I've been fasting and going to the gym, and there's a new me about to emerge. What about yourself, Adka? How have you been?
I've been good, Ali. God, I've probably gone exactly the opposite way. I've paid subject to all of the Easter eggs and chocolates that's been knocking around for the last sort of couple of weeks. So while you're emerging as a new and better you, I'm emerging as a slightly heavier me at the moment. But it's all in good fun. We've still got a few weeks before summer kicks in, so it's not panic crisis yet, which is a
Well,
good.
if you've got spare Easter eggs, you know which way to send them.
God, they're just coming out of everywhere at the moment, the Easter eggs, aren't they? I've seen so many different types this year. I think the most interesting one that we've gotten through is a drumstick Easter egg. Which, do you remember those retro sweets from the 70s? They
Why are you asking me about retro sweets?
not directing at your boy in any reason. But yeah, there's amazing what they've done this year, actually. But I need to clear all of this out of my house. No more Easter eggs and focus on shredding for the summer, to be honest. Well, look, today is the second episode of the Tax Files, where we're joined by Bill Dodwell, who leads the Office of Tax Simplification. Bill has had an illustrious career in taxation, having held senior roles at Arthur Andersen and Deloitte, and more recently has been at the forefront of tax policy development.
Yes, we will shortly begin by asking Bill about his background, his recent work, and discussing interesting topics like wealth taxes and capital gains taxes. Also, some recent news stories, as well as our now famous rapid fire round, which uh, will ask some personal questions just so that we can get to know a little bit more about Bill and his background.
Yes. Well, welcome, Bill. We're delighted to have you join us. How was Easter?
Oh, very good. Beautiful weather. Yes, no, enjoyed it.
Yeah,
Caught up with the family, which is also good over the time.
nice. Hopefully, we haven't had our 5 days of summer for the year in one weekend here in the UK.
Indeed.
Excellent, Bill. Welcome, and a pleasure to be talking to you again since our old Deloitte days. Perhaps we could start off by asking what was the key moment that started you on your tax journey?
Well, that's a really interesting question, and I struggle to explain it, is the honest answer. I studied law at university. I went to King's College, and I didn't include any tax there. But I had to stay at home with my parents, who were in the London area, really for financial reasons. It's true to say, and I then thought it'd be really great to go and do a master's degree and move away from home and that sort of thing. And I was fortunate to get at the time, a full grant, which is obviously completely unknown today. And so I went to Cambridge and did a master's in law. And for some reason, I was particularly interested in tax. I wanted to study that. And it was great because my first instruction in tax came from a real master, John Tiley. One of the sort of great writers of tax and one of the great teachers, I think. Sadly, no longer with us, but a really great person. And I still remember the lectures and the difference between the fruit and the tree, and those sort of critical components of tax that sort of helped get me into it. I've even got my very first yellow book, which dates back to that sort of period. It's a very slim little volume. Modest number by comparison with today's legislation, of course, but that's what got me in. And I then thought, well, where next? And so I joined Arthur Andersen.
Wow. Bill, you'll have to hold on to the Slim Yellow book. I'm sure it's going to be worth something on auction value in a few years' time. So amazing that kind of got you started off on the tax sense. What motivates you from a tax perspective? Kind of what keeps you interested in this subject after so many years?
Well, as we know, it's a complicated subject and it's ever changing. There's something different in tax, almost every day, certainly every week. And I think that's a really enjoyable part of the role. I've also, I've been an advisor throughout my career, and trying to take, the complicated parts of tax and put it in a manner that a business person or just occasionally somebody dealing with their own family affairs, trying to put it in a manner that is relevant to them and is understandable so that they can make the right sort of informed choices. I mean, I think that's a really great aspect of the role. And the other aspect I would always highlight is working in a team. I did at one stage think about going to the bar, but I'm glad I didn't even attempt to do that. Team working is so much more enjoyable, I think, all round.
Yes. Amazing.
Excellent. So, Bill, you and I met when I was at Deloitte, and one of the things which I didn't see was obviously the Anderson Deloitte transition. You were there, weren't you?
Yes, no, I was an equity partner in a general partnership, which caused people a certain amount of alarm because, for those who don't know the history, Arthur Andersen was one of the big five at the time, one of the sort of, major networks across the world. And due to problems with their US audit practice, they ended up, essentially the US audit practice crashed. And it had a criminal prosecution for which it was eventually found not guilty. But nonetheless, it was a complete disaster for the firm. And so the UK firm, or the people in it rather, to put it more accurately, eventually joined Deloitte. So, I joined Deloitte on the 1st of August 2002. And I would pay great credit to the leaders of Arthur Andersen and Deloitte at the time in the UK, because they worked really hard to put together, what were two similarly sized tax practices overall, and they did it in a manner that we meshed together really well. So great credit for that. And part of that was I joined the tax policy group in Deloitte. So I ended up doing some client work, about half my time, and the rest was spent on knowledge sharing, training, and most importantly, contact with government in the sense of, talking to HMRC and responding to consultations, both from the Treasury and HMRC, and also more broadly, the OECD and the EU at the time.
Wow. I mean, the rate of change that you must have seen over the years and the different profiles of tax and what's been thrust into the spotlight versus sort of some of the new things that were coming up. How was that process of evolving? I mean, you've almost been through the kind of journey of how tax has evolved from a corporation person point of view, your entire career, which is amazing. How was that evolution for you?
Well, I don't think tax is static. We can all look forward to continued change and new and different taxes coming along, particularly in the environmental area, of course. But what has happened essentially was that globalization and international business really took off. When I first started, we had exchange control in the UK. And it didn't take very long for that to disappear under Margaret Thatcher, of course.
Mhm.
And, we had really high rates of income tax. And again, those were reduced by Sir Geoffrey Howe, Lord Howe, as he became, and Nigel Lawson as well. So we saw the sort of transformation of the system generally. Now, alongside all those rate reductions, you actually saw the base being extended quite significantly.
Mhm.
So actually, the tax take hasn't reduced at all. What has happened is that it's sort of taken from us and taken from business in a different sort of manner. And if you look over time, what has happened, income tax is as important as ever. It makes just as big a contribution to the total tax take as it ever did. Corporation tax has actually grown a little bit overall, despite the rates coming down, partly covered, of course, by the reduction in tax relief for fixed assets, capital allowances, and so on. But VAT has come up in importance, and against that, some sort of specific consumption taxes have been substantially reduced in importance. We're all aware, for example, of the fact that fuel duty has been frozen in real terms for at least the last decade, and that's just one example of a specific consumption tax reducing, whilst the impact of VAT has rocketed upwards. The other tax that's gone up a lot is national insurance. Those rates have gone up. Employers now pay even more than they did before, and that has widened the gap between employed and self-employed people, which I think is one of the significant problems of the UK tax system generally.
Excellent. So, Bill, one of the things that I recall is I was studying philosophy, and I found this book that was called Philosophy Made Easy. And I walked into my class with that. And not only was I sort of like singled out by the lecturer and made fun of, or everybody had a bit of a laugh at my expense, but it was explained to me that by definition, it can't be made simple. And now that you occupy this thing called the Office of Tax Simplification, is that not a contradiction in terms?
Well, that's a very good question. The office, as you know, was set up in 2010, and we are the independent advisor to government, particularly the Chancellor, on tax simplification. Can our system be made simpler? Well, yes and no. I think you have to remember, as I'm sure we all do, simplification shouldn't be a policy in its own right. Simplification should be a principle that is used by governments when designing tax and when implementing tax. Because the overarching policies, the ones of raising enough money to cover public services, encouraging or discouraging particular activities, trying to deal with market failure, if you like, by putting incentives into the system. Redistribution is another sort of key part of taxation policy. So those are the big policies, if you like, that government makes choices about. But trying to make it simpler for people overall leads to better compliance, more trust in the system, and a general ease of dealing with tax generally. For me, it's really important that people should understand the implications for either their business or their family choices of how the tax system affects them, and make the best choice overall, armed with that sort of knowledge and broad understanding.
Excellent. Well, as a tax advisor, I hope you're not too successful in what you do. Just joking.
Yeah, but you'd rather deal with a better informed client, wouldn't you?
Of course.
Because as you know, business is really complicated. And I think one of the reasons why our tax system is complicated is because business life has got ever more complicated. Accounting has got, immeasurably more complex over the course of my career. And, for a normal person, accounting simply isn't understandable these days. And maybe those who the high priests of accountancy concepts understand it and think it's all better, but I do think that they could do something more to make it easier for general users and people to understand things. One of the things we see in tax all too often is a massive confusion between sales or turnover and the profit you make from a business activity. And too many people don't understand that, and it's a really important part of, tax and the concept of asking people to pay tax on how much they make, not how much they sell.
And it's almost sort of quite reticent, I think, in terms of empowering people, right, to sort of make the decisions, being fully aware of the implications and kind of the motivations behind it. Which, as we spoke about earlier, with the rate of things changing in the way that they are, it kind of becomes all the more important, I think, to kind of empower the population to be able to make those decisions based on the information out there. And I guess that kind of leads us into some of the topical bits that we're seeing from a tax perspective at the moment. We're in a world where technology is taking over, and the rate of change around sort of automation and all those sorts of things are happening so much quicker, which is leading to an impact in industries and the way that people are employed in this day and age. Have you felt that there has been a significant shift when it comes to tax technology, and kind of how do you envisage that changing moving forward into the future?
Well, I think we're a sort of important moment. Clearly we do so much more with technology than we ever used to, but there's quite a lot further that we could usefully do to help people. But we need to have the sort of debate about, should the system do it for you? And the risk there is that you, the individual, don't understand what is happening, and you don't understand those sort of economic drivers on what you're trying to do. And that, I think, would be a real risk. And the other risk you see in the technology world of tax is that people just accept it. The computer says it, therefore it must be right. And of course, we all know there are errors in any sort of system in the best will in the world. And so we need to sort of help manage all of that. But nonetheless, I do think technology can definitely help people and be a force for good overall. And if it's implemented well, and I hope HMRC will obviously do that, then I can just see it actually building trust in the tax system, which we were talking about. So I'm looking for third parties, let's say, to do more in the tax system. Currently, many people probably don't know that banks and building societies have to send details of interest income to HMRC every year, and they do. But the problem is that HMRC can't match all of that to our individual accounts. Now, probably 2/3 of that isn't taxable thanks to the personal savings allowance. But a 1/3 is taxable, and that is millions of people potentially. And it would be better if those banks and building societies had a unique reference of ours so that they could send the data in to HMRC. It could instantly, pretty instantly, be matched into our tax accounts. We could see it to check it looked right. And our tax affairs could be calculated for us, armed with that sort of better knowledge. And it'd be the same for pensioners. The state pension, that needs to be upfront and visible and put into our tax accounts so that those people, those pensioners, roughly half who end up paying tax, have a better understanding of the system and have it managed better for them.
It's almost touching on that point around transparency, isn't it? And tax transparency in terms of not just from a personal level what we're paying, but also from a company-wide contribution ESG type way. I think there's definitely a kind of current theme that sort of runs alongside that, where tax technology is integral to that sort of pushing us forward. Do you see any kind of jarring disadvantages of tax technology as it stands at the moment that could be potentially amended sort of pretty quickly from your point of view based on the landscape at the moment?
As I say, I think the things that we need to debate about is, does technology aid understanding or does it take it away?
Mm.
And for me, that's really important that people still have that understanding. And so I would hate it if the technology sort of masked the complicated black box, because that wouldn't help me or you or everybody else make the sort of better choices that we ought to be doing. We'd just sort of, money would disappear, and that's not a good part of transparency. That's not a good part of trust in the system generally. So we have to be very careful, I think, when using technology. But stuff that just passes on routine information to HMRC and then they process it properly, and then I can see it and use it. That for me is a real sort of aid in the whole environment generally.
Interesting. I was looking at HMRC's recruitment policy, and it is overwhelmingly now for tax technologists. So I think there's definitely something there.
And I think it's the same with the larger professional service firms too. They're increasingly wanting people who, have both technology skills as well as tax skills, because you do need to blend both.
Are you finding that, Ektaa?
From a recruitment perspective, I think tax technology is definitely an area of growth at the moment, but it's almost an unknown, right? I think it's quite a new skill set into the market where people are still sort of figuring out actually what point within tax technology is the main skill set. Is it the project management element where we're rolling out to a business and we need somebody to kind of communicate how this works? Is it the inception of kind of the idea of technology, of building something internally that sort of helps with the automation and provides better flow of information? It's such a broad umbrella, the word technology and tax technology, that I think it's still so new, where people are still trying to figure out actually where is the centric around that. I think that the debate from kind of some of the FTSE listed and some of the SMEs that we work with is very much around actually the kind of tax technology. Is it self-sufficient enough where we say, right, we're going to implement this solution and it will solve all of our problems, versus actually having someone that's still manually involved with the process to be able to troubleshoot and almost be that liaison to a team that is still quite new to this, right? So I think that's sort of the debate around the tax technology skill set. But absolutely, I think if I look at the rate of change of the DNA of the tax professional and the skills that I think people are looking for more in this current market are very much around actually, are they able to implement certain solutions? Are we able to adapt technology and what that looks like for us as a business? Are we able to troubleshoot that and frame it for us specifically versus a cookie cutter version of a system?
Yeah, I mean, we have in our own practice a unit that's dedicated towards things like being able to handle big data, because it's you've got to have those analytical skills if you're going to be a tax professional of the future.
Yeah.
Anyway, let's move on. I have something really important to discuss or ask of Bill. France already has it. Biden is pushing for it. And Scholz has announced a 100 billion Zeitenwende program, defense program that needs to be funded. And all eyes are now on wealth taxes. Do you think it's a good idea?
I think that's a really hard question to look at. If you look, one of the points that people behind a wealth tax do make is that assets and growth in value of assets haven't been sufficiently taxed in more recent decades, it's true to say, and that there has been a significant growth in assets held by the very rich throughout. And we know capital gains tax rates are much lower. Not everyone pays inheritance tax on all their estate, thanks to some of the reliefs that are sort of built into the system generally. So, you do have those sort of questions that need to be looked at. However, introducing a wealth tax would be a really complicated endeavour. And my personal view is that a government that was concerned by the level of asset taxation ought really to start by looking at the taxes we've already got. They should look at capital gains tax. You'll know the Office of Tax Simplification produced 2 reports on capital gains tax. And some of the issues are sort of clear. But people, funnily enough, have quite different perspectives. There's such a range of different views about, the level of capital gains taxation. We had people write into us arguing that, the rates of tax on capital gains should be the same as the rates of tax on income. We had other people saying that absolutely not. That would, it's critical that you have much lower rates of tax on income, and trying to reach some sort of consensus there is almost impossible, it's fair to say. And I think if you look back over history generally, politicians have taken quite different views. Nigel Lawson famously did unify the rates of capital gains tax and income tax. Those who came after him have reduced the rates of capital gains tax. Gordon Brown was very keen to, incentivize entrepreneurs by offering them lower tax rates. And although you could reasonably make the point that maybe entrepreneurs need the incentive going in, but there's equally a pretty strong feeling that that carrot of, a lower tax on the gain you realize at the end when you exit your business or something like that, that does seem to be a motivational factor, even though it's not really helping people by funding their business generally. But overall, I think it'd be better to look at capital gains tax. I think it'd be better to look at some of the questions of how inheritance tax works and the reliefs in that. And that would be a more productive system generally for me than trying to look at a wealth tax. The final area that, again, is worth, the OTS has not looked at all, is what to do about stamp duty on property and what to do about council tax. And I think there's sort of a reasonably broad acceptance that neither is especially satisfactory as a means of taxing. But equally, changing them is problematic. And, some people have put forward suggestions for a land value tax. Other people have, talked about abolishing both of them and charging an annual tax based on a percentage of the property value. I do think that's an area that is worth studying for the future.
If you look at the main proponents behind the wealth tax movement, if I can call it that, is the lack of fairness that is often cited, and particularly in the United Kingdom or across the globe, the disparity between the rich and the poor has, it just goes up and up. And I think that's really sort of like where it's coming from. And I completely take on board that it's obviously simpler to make use of existing taxation mechanisms rather than introduce a new one. But do you think there's an overall need for some form of rebalancing to basically redress this imbalance that we're finding in society?
I don't think that's really a question to which I can give a good answer. That's a very political type of question, and that's probably not my sort of best area of expertise. I would just point out, though, that I'm not sure everyone fully understands all the facts in the situation. The extremes of wealth are much greater in the United States, and I was reading recently greater in Germany than they are in the United Kingdom. And I just think it's worth bearing that in mind. It's also worth bearing in mind that income equality has not changed over the last 20 or 30 years, more generally. Now, I know income equality isn't the same as asset ownership as well. But I do think you also need to ask, well, what is it? Where was the public support from this? And some very good work done by a body called the Wealth Tax Commission, which was essentially two academics, Dr. Aaron Advani and Dr. Andy Summers, and a barrister, Emma Chamberlain, together with quite a lot of people helping. And they looked at the questions of wealth tax. But the most important thing to conclude, I think, was where was the public support? And there is public support for a wealth tax, but only if it doesn't tax people's houses and it doesn't tax people's pensions. And the trouble with that, when you take those things out, you end up with a very narrow tax that doesn't doesn't tax many people. It would tax some of the most mobile people and assets generally. And I think that is definitely one of the reasons why wealth taxes across the world haven't really proved to be very acceptable or very effective as means of taxing what we've actually got.
Yeah. And as you say, when you take those two sort of major pillars out of it, what is left in terms of actually the tangibles around it? And I think post the last 2 years with the pandemic and everyone sort of going back into business recovery mode, I think there is an element of sort of balancing the fairness around the tax system to sort of the direct contribution to the bottom line, which is a major factor. Now, kind of being in the position that you are and kind of emerging out of the last 2 years, looking forward into the future and discussing some of the topical solutions that are on the agenda, what do you see the future of this being? How do you see the next sort of few years unfolding from a tax system point of view?
I think we can see a number of big issues and problems in the system. The first is that we've got to do something surely about the very significant difference in tax treatment between employed people and self-employed people. Some people want to align that with employment rights as well, which is another complication to put into the whole system. But, given that self-employed people pay substantially less tax than employed people, when you take account of employers' national insurance, of course, and the other costs of employment that go with it, such as apprenticeship levy for larger employers and so on. When you take account of that, that difference is surely too big. And that is one of the issues in the structure of the UK tax system, which does worse compared to other countries generally. The other big issue for the UK, of course, and indeed for everyone actually, is how to deal with environmental taxes. They can't solve all our environmental problems, but they're currently not giving us sensible encouragement or discouragement either way. One tax that is actually really successful is landfill tax, which was is still a tax on amounts of rubbish taken off to landfill fundamentally. But the great thing about that, I would suggest, is that it was started off at a low level and then, increased fairly steeply after that. So there was a sort of incentive to change. And at the same time, government put money into supporting recycling and reuse programs, which are really critical. So it had both a sort of, the stick and the carrots aligned together. And I think you've probably got to do that with environmental taxation more broadly as we start to move forward. And, it would be good to start to see some public discussion of all those sort of various options generally.
Well, I feel very strongly about the environment, and COVID-19 sort of like disruption has really messed that agenda up, towards net zero. So I think there was definitely areas of taxation that need to support that movement, because across the globe, really, it's not just the UK.
Of course.
One of the things I was going to sort of like, as you know, Bill, we are specialist in financial services taxes, and post the global financial crisis, the sector was seen as easy prey, where successive chancellors would come in and basically windfall taxes, and it completely started departing from the general economy, how that was being taxed, and how the banking industry was being taxed. And I think they've been sort of like in the doghouse for a long time, and perhaps rightly so, but they were there. Now, this idea of windfall taxes is an interesting one, where you just come in and basically say, you made too much money, so I'm going to take some of it away from you. And now, currently, it's again under discussion, particularly given the sort of like price rises and so on in the energy sector. Do you think it's generally a good policy to have windfall taxes?
I think the challenge with windfall taxes is that they're not brilliant because they can disrupt investment patterns, and you probably don't want that when you're trying to design a system. Now, once in a while, there may be something that possibly should be recaptured. Labour, as is, people may recall, had a special windfall tax on the privatized utilities, essentially arguing that they'd been sold to the public too cheaply. They'd proved massively popular, and here was a one-off levy to do it. And it was sort of sufficiently flagged well in advance of the the 1997 general election. People went into it knowing there was going to be a 5 billion windfall tax on those privatized utilities. Whether it's right to do that in the oil and gas world, I think is more questionable, partly because our actual oil and gas production in the UK is really quite small, and we end up importing a considerable amount. So, and a windfall tax wouldn't necessarily be a very helpful part of the tax system generally. So, in principle, I'm not a fan of wealth taxes, of windfall taxes, but I can see that once in a while there's something to do with them. But I'm not sure at the moment they would raise enough to actually be sufficiently successful.
Excellent. Bill, I was going to ask slightly different, take the discussion in a different direction, which is, I mentioned that you've had really quite a remarkable career in different areas, obviously within practice, but also sort of like the career that you have outside. And one of the things that you do is you write for the Tax Advisor magazine. How did that start? And, does that take up a lot of your time?
I very much enjoy it. I write once a month. The hardest thing is always thinking of the topic. Once you've got that in mind, and I've got the article I'll be writing this afternoon in mind, then it's relatively easy to do that. What I look for in writing is I want to put forward to readers something that they probably wouldn't encounter. So I'd like to give them some data that isn't always out there in the public environment straightforwardly, or pose interesting questions about tax more generally. But I've always enjoyed writing. It's it's part of that thing I sort of talked about earlier. Tax is complicated. The role of tax advisors is to take this complicated thing and put it in terms that regular people can understand. And that's what I hope to achieve through my articles.
Bill, you don't seem to sit idle. I mean, God, writing for the Tax Advisor magazine, the director of the Office of Tax Simplification, a member of the GAR advisory panel. What do you think the future holds from a career perspective for you? In which direction do you see your career moving?
Oh, I don't know. I mean, it's probably fair to say that I haven't got decades ahead of me from all of that. But I've been very privileged to have enjoyed, have managed to get into something that I thoroughly enjoy, that is challenging and interesting throughout. That aspects of change I've talked about, really matter, that you have to deal with that. And now, working to try and make the experience of regular people of the tax system, make that experience better, is a really invaluable thing I hope I can do with the whole team at the OTS, of course, as we all work together on that. And we've got to work, to improve that system. It's important that people understand. It's important that people trust HMRC through all of that, despite some of the questions people raise. And simplification has a big part to play in that. And I hope to be doing that for a few years hence, let's say.
Excellent. Well, thank you very much, Bill. And before we go into our rapid fire round, I just wanted to recap what we have covered today. We had a really interesting discussion about your background, your time, how you moved across from Anderson to Deloitte, and then to the OTS. We discussed your work together with Ektaa regarding technology. We discussed environmental taxes, wealth taxes. So it's been quite an interesting discussion so far. And we've also done a little bit of future gazing as to where things may go. With that, I would now like to sort of move to the next part.
Bill, we may have spoken about technical tax subjects up until now, but this is where it really gets technical. We're into the rapid fire round. Yeah. Just to get to know you better, to get our listeners to know you better, we've got a few questions for you in the rapid fire round. So if you're ready, shall we kick off?
Mm-hmm.
Right. So early bird or night owl?
I used to be a night owl, but as I've got older, I've started getting up earlier, which is probably a bad. So I get up early and go to bed a bit earlier as well. But it's a
Right.
transition, let's say, through life.
Do you prefer cats or dogs?
Oh, I'm not really a great animal person. I'm sorry. Looking after animals is really important. I'd hate to see them upset, but no, I don't think I could manage a pet. Be too hard with all the other things I try and do.
Yeah, to squeeze it in. City or countryside, which do you prefer?
City overall. I love our countryside, but I would never want to live there.
Art museum or history museum?
Art museum, I think, would be fair to say.
Tea or coffee?
Called coffee. I've started getting to interesting teas recently, though. So again, nothing is static. It's fair to say.
No, God, you'll need the coffee to power you through your list of list of things that you've got on the go now. And lastly, where is your next holiday destination?
Well, that I hope is fairly soon, and it's Portugal, Lisbon,
Oh, nice.
where I hope for a bit of culture and just seeing a bit more of the capital of Portugal.
You'll have to stock up on some pasta de natas while you're out there.
So, Bill, how have you been spending your time recently? Is there a particular book that has sparked your interest, or a movie, or something like that?
I watched a fair number of movies, which has been great. But the thing I've really sort of just picked up on over the last few months is online bridge. It's something that has really developed thanks to the pandemic. I used to play bridge, once a month or something like that in a bridge club, and now you can just do it for a sort of quick hour and a half, and have great fun online. So that's a worthwhile thing to do. And you can, because it's online, you can actually play with people globally, which is fantastic.
Oh. So how do you kick back, Bill? How do you relax and de-stress from all of the OTS and all the other things that you're up to at the moment? What's your
It's not a
relaxation
stressful
go-to?
role. So not at all. No, things like playing bridge, things like, a bit of travel is really enjoyable. Going to the theatre, I was really lucky to see the fantastic performance of Cabaret with Eddie Redmayne and Jessie Buckley, and they've come out of the show now, but it's still a really great show, and it's just one of the most memorable. It was an afternoon in my case, so I loved that, and it definitely fully engaged me.
Wow. And lastly, what piece of information or advice would you like to leave our audience with?
Enjoy change, because it's going to happen, and if you worry about it, it won't help you. So just, stuff happens. Let's embrace it and carry on. And it's hard to do. It's easy to say, or like so many things, but that I think is really important for all of us.
Amazing. Well, Bill, thank you for joining us. Thank you to all of our listeners to listening to the Tax Files. It's been a pleasure having you join us. Please subscribe and get in contact if you wish to discuss any of these topics with us and our team, or if you have any questions at all. We will catch you here again at the same time next month with the most esteemed guest. To stay up to date with announcements, updates, and guest reveals, please follow Hansuki on LinkedIn.
Thank you very much, and we hope to see you again next time. Thank you.
Thank you for inviting me.